How would you like your gas prices to double? What about oil at $150 a barrel? These are very real possibilities right now, today. I'm going to explain the changes that have happened, the companies that are involved, and the countries as well. All here in this one video. You've got to pay attention. Stick with me. The first thing I want to cover is what's going on with oil itself, the most recent developments. You can see it here for yourself. Saudi Arabia to extend voluntary cut of 1 million barrels per day until the end of the year. This was something that has been going on. I've been covering it for you. They weren't exactly sure how long they wanted to go on for, and now it looks like for the rest of the year, they are cutting. Now, of course, when they cut and Russia cuts, well, what does that do to the price? It makes it go up, obviously. And so we see that right now where the price has escalated. I'll show you the charts, but know that it isn't just Saudi Arabia doing it. Here you can see at the bottom, the cut adds to the 1.66 million barrels per day of other voluntary crude output declines that some members of OPEC have put in place until the end of 2024. And so we got to realize that this has started to have an impact. The prices go up as a result. Okay, a few things you got to know. Russia and Saudi have done their output cut. Other countries, you've got gas prices, transportation expected to increase as a result. That means your food prices are up. That means everything, because it's coming on the trucks. It's coming in some sort of way. It's going to, have those increased expenses as a result of this. There are some other factors, though. If it's too high, that means we could actually induce a recession. So if it does get to that $150 a barrel, the economy can't stand on that. $150 a barrel is too high. So how long it would ever be able to stay there for, even if it does, it wouldn't be the first time, of course, but it's something that then slows everything down. And we are told right now by Goldman Sachs, by all the big boys, that the recession is no longer coming. Well, if oil is about to go to these levels, well, then what do you think happens? Well, we're going to talk more about that in a second. You could see the prices, of course, after the Saudis extend their voluntary output cut to the end of 2023. Here we have it. What are people asking? Like, you got to understand, like, what's going on in people's minds. And there are a few resources you can use for that, and simply Google being one of them, but you can use Answer the Public. There are others. This is what they said. How many years of oil left? And according to current consumption, they're suggesting 47 years of oil left. All right, 47 years. That's what we're being told. There's a few things here. Are we at peak oil? That's a question, and I talked about this in my first book, Peak Oil. What I want to note is that we're using more oil than we did before. We're right at the level like from 2019, the peak, or beginning of 2020. But let me tell you something. We are going into places and doing things like fracking because we're not finding the oil like we did before. They're not just knocking on the ground and it comes all up. So we know that they have to go to these extensive methods, going in the middle of the Gulf of Mexico, going on all these ways in order to bring that up. That's one thing. And they wouldn't do that if they didn't have to, because it's very expensive, it's dangerous, all these different things. And so we know that. And that's one point. But they're still able to get the oil. We're still producing it. We are still bringing it on the market and refining it and so on. So we know they're able to get it. And there hasn't really been a concern so far. We also know that these countries like Saudi Arabia are starting to shift, and they are looking at other things right now. They're not trying to just be that one trick pony. But regardless, this doesn't even matter, because these countries in the West are saying you're not going to be able to use gasoline vehicles. All of the trucks are going to have to be converted into an electric vehicle by 2030, by 2035, like whatever that is. They are forcing everybody onto this new system. Oh, and if you don't, it's probably okay. You just got to pay some tax, some fee, some this and that. And oh, by the way, unless you're making, 8 figures, you're not going to be able to afford it. Do you see? Do you see what's happening? So it doesn't even matter. So long term, we've got to pay attention to that and be concerned about it ultimately as investors or maybe our jobs and so on. At this time though, not the case, but I would watch that green movement. Future prices for the commodity subsequently shot up as supply shrank. The international benchmark Brent crude rose 1.6% to $89 a barrel. In fact, it went to $90 a barrel. Highest since November 18, 2022. Okay, so you know that the prices have escalated significantly, and I wanted to touch on two things here. Number one, crude oil exporting companies. So you could take a screenshot of this. You probably know what a lot of the names on here. You could take a screenshot or just go to the link in the description, okay? But I wanted to highlight this because we'll talk more about it at the end as well. Like, what can you do about it? Well, if the prices are going up, the thing I mentioned in my first book was you can offset that by owning some of it, right? Price goes up. Okay, I own some of it. So I'm balanced out. I'm not that the inflation in that respect is not hitting me at home. Okay, it's kind of just balancing. So you'll see this. It's BP, Chevron, ConocoPhillips. I'll go down the list. It's all of them. Okay, and that's that. We have this as well. Let me show you. Searchable list of crude oil exporting countries in 2022. Okay, so I wanted to give you an idea of everything, like looking at crude from every angle. Saudi Arabia, in terms of dollars, their exports. You got to, by the way, this is in dollar value. So if the country's extremely weak in relation to the US dollar, of course, it's going to look different. If you measure it in barrels of oil, that's going to look different. Like you gotta understand when we are talking about exports of a particular commodity from a certain nation, is it priced in dollars? And what are the other factors at play? It actually makes a big difference. Saudi Arabia, Canada, Russia, United States, United Arab Emirates, Iraq, Norway, Kuwait, Nigeria, and Brazil. All right. Huge. I mean, Saudi Arabia is massive. There's no question about that. Canada needs a lot of refining on their oil. That's the difference between the two countries. So they're able to produce their oil in Saudi Arabia for next to nothing, whereas Canada, it's a whole ordeal. So know that as well. Okay, refining costs are much more expensive. And you look at it overall, like resources overall, think about the exports overall. China is no longer the US's largest source of imports. And that has been surpassed here by, as you see, the EU, Mexico, and Vietnam are replacing that same lost share of the US market. Things have changed over the last few years when we look at China. It's not just like oil I'm talking about here, but you look at what China's doing. They're going to the BRICS. BRICS have expanded. UAE, Saudi, Iran, the BRICS are 80% of world oil reserves. It's just unbelievable. So China's saying, we're going to do this. There's this part of the world sort of collecting together. It is a very different circumstance, new world order, as they love to call it. At the time of this recording, Brent is at $90 a barrel, WTI at 86 and change. The prices have gone high, very high, in fact. Here you're looking at the leading crude oil importers worldwide in 2022. So Europe, extremely reliant on imports of oil. China, next down the list. United States as well, right? And just go down and down and down. And by the way, Saudi Arabia, obviously at the very end, okay? And so here we have it, okay? That's very important to note as well. So I'm giving you the full perspective right here. You're seeing the imports, the exports, dollar values, the companies involved. If you didn't have that perspective before, now you do. You can always rewatch this. You can always look at it again. This is what you need to know as an investor, but also just to have the mindset, because we're going into a much more difficult world. I'm going to talk about at the end what you've got to do as well. Here we have it, the tipping point in global oil demand. What they're saying anyway, because of electric vehicles, fuel savings by 2040 are expected to be, this amount, basically what they're saying is, look, at some point, peak oil demand is going to be around 2025, 2035, somewhere in that range. Is that true? I want to know what you think. If we are going to see peak oil demand and these electric vehicles start coming in, fuel savings start coming through, is that going to happen or not? You tell me. Let's talk more about resources. Let's look at this holistically. You'll see it. The rig count is still plunging big time. And that tells you if they're not putting more rigs in place, if they're not digging more of the stuff up, what do you think happens to the price? But why is a company going to put more rigs? They're having trouble making it profitable as it is. And then the government is saying, we don't want you in this business. We want you to make solar panels. So they're not going to do it. And that's the way it goes. I'm not, you don't hear my bias coming through. You're hearing the economics. We as individuals, we have to be prepared to pay more. That's what's going on here. I need to stress this. You are going to pay more for resources. What do you need? What happens with the electricity grid? You don't even know. Okay? But you as the individual, when you get your bill, oh man, you know. That's what you know. But in terms of, what type of energy they're using, you may not even know. But the point is you got to pay more. And so we got to deal with that. Hang in there, okay? Goldman Sachs, they don't see recession. But like I said, if prices go too high, we get a recession. Because the middle class is the one that's going to feel that. Not the elite that they don't care what's going on. And then just showing the industrial production for Germany, that has gone down as well. So Europe is feeling it big time. There's no question about that in every aspect. Just trying to show you that this is a global thing. I give you these points every single day. That's why you got to tune in every day, because you're going to hear bits of China. You're going to hear bits of Europe. You're going to look at Australia and New Zealand. And I just try to pull through, and you see all these common threads. Isn't that interesting? Yes, there are differences. There's always going to be differences, but a lot of commonalities. And for a lot of people, they're asking, what can I do? I understand it's a big difficult world right now that we're in, changing times. If you believe more cuts are coming to the production of oil, that's going to stay the way it is, they can change it tomorrow, but they're saying all the way through the rest of the year, a few months left, and demand is going to remain high, well then, prices can rise from here. Yes, I understand that's simple, but there's many factors at play. And so if you believe that, you can invest and offset the price increases that we've been experiencing. If China or any other major player goes into recession, demand will slow down and then prices could fall. That's important. I showed you the imports in China. Okay, it wasn't like I was just showing you that stuff for fun. Imports of crude oil from China. But now if China goes into recession mode and they don't start throwing out the stimulus, well, then it means that they're not going to need to import as much. And so prices can come down. Okay? There are different ways to invest in it. It's up to you how you want to approach it. Reference the companies earlier. You can look at those companies. You could potentially be investing in that, or you could get into the ETFs as well. Okay, there are a lot of ETFs based around it. You don't want to hold, in my opinion, a lot of the ETFs for long periods of time, because the way that they're investing generally over a long period, it doesn't keep up with the price of the actual commodity. But if it's a very short-term kind of thing, maybe you're like, yeah, I'm going to get in now, but I might sell it in a few weeks, like you might be okay. Okay, so that's the different story. You got to understand that. These are the things that I talk about all the time. Yes, I mentioned my book, but there's a lot of stuff on the Discord as well. So check out the Discord. I'm adding more in there soon. Compass, a few days away. I promise. I know I keep talking about that. Get on the Discord, because you're going to be able to hear from like-minded people. I've got people from all over the world in there constantly. Every single day we are sharing stuff. And when you get in there, reach out to me. Say, hey, I'm here. and I will reach out back to you. So I message every single person that comes through. If they say anything, if they ask any questions, I try to answer it. I'm in there every single day. Click that link in the description below. And now you waited for the best part of the episode, everybody's favorite, the comment of the day. All right. Dexter, check this. Thank you very much for that. Check this comment out by Dexter. He said, I've been an elevator mechanic for Otis for 15 years now. I work for Schindler. It would be a major impact to see them fall. I was wondering how they would implement UBI with the major union companies, but this clearly it. Currently, elevator mechanics pay is, I couldn't believe this, but my goodness, $68 an hour with a $15 an hour raise coming up within the next 4 years under the new wage contract. But we won't see that with what's coming. Time to walk away from the money, invest in food and self-sustaining methods, and you'll weather this storm easily. Think Joseph. It's here, friends and family. I want to thank you for that comment. I think it's interesting to see the way that this is going. Things are changing. We're in definitely some difficult times, but stay true to what you're doing, okay? We got to understand that you got to be prepared. You got to do what you can at this time more than ever before, okay? If you need me, reach out to me on Discord. There's a lot of people in there that you can feel a connection with and say, hey, what are we going to do about it? There's sections for everything, for self-sufficiency and preparedness, for stocks, for crypto, for precious metals, everything. Everything's in there. I'll see you there, and I'll see you on the next one. Take care.